All right, we're going to get started. Hey, everybody, it's Aaron Dillon here, Managing Director for AG Dillon & Co. We're a venture capital firm focused on pre-IPO companies, working with individual investors, financial advisors, and institutional investors. All right, so I got a pre-IPO company update here for you for the week ending 30 December 2022. Today, we're going to hit on big company news for last week, large capital raises for last week, individual pre-IPO company stock performance update. We're going to spotlight Stripe, to an individual pre-IPO company, and also talk about emerging technology, brain-computer interfaces. And we'll end with some Q&A. All right, so first up, we have some big company updates. All right, so Instacart, the online grocery and delivery service, cut its internal valuation by 20% this week to $10 billion. The company last raised a $39 billion valuation in March of 21. That number's come down a lot in the secondary market. This new internal valuation is like 74% lower than what their last primary financing round was. The company's offers option plans. A lot of these pre-IPO companies offer option plans to complete and are required to complete these 409A valuations, which I'll talk about a little bit more later, by the IRS annually to set the fair market price for their stock. So these third-party companies complete these 409 valuations, and startups usually can also update their internal stock price for competitive reasons too, for recruiting, right? If you're trying to bring on an employee and their stock option price, execution price is at 50% higher, where kind of the current market value is for the company, it's not very attractive as an employee to come work there, right? So they'll reset these internal valuations to get the option exercise price kind of more in line with the market, which then I think helps with the recruiting as well. But Instacart's primed for an IPO. I think once the market turns, we're going to see these guys go public. All right, Gopuff, the convenience store delivery app, has partnered with OpenBay to help Gopuff's delivery drivers save on auto services. So OpenBay provides drivers with upfront pricing on repair and maintenance services. Drivers can book appointments nearby with nearby service professionals that offer up to 25% in discounts on parts and labor. So naturally, Gopuff's looking out for their drivers. It's got to be competitive. There's a lot of these services out there, a lot of delivery services out there right now for these kind of contractors. So naturally, having these competitive offerings or benefits might help attract people and have them drive with you. Gopuff has a $15 billion valuation as their last primary capital raise in July of 21. Okay. And I got the wrong logo in there. So we're talking about Plaid here, right? So Plaid is the financial data aggregation and compliance solution. It laid off 20% of its staff in early December. Its most recent cuts will probably come from their engineering team. Zach Parrott, Plaid CEO, said the following in a letter to employees. Let me read this to you. The simple reality is that due to these macroeconomic changes, our pace of costs of growth outstripped the pace of revenue growth. I made a decision to hire and invest ahead of the revenue growth, and the current economic slowdown has meant that this revenue growth did not materialize as quickly as expected. So Plaid has a $13 billion valuation as the last primary capital raise in April of 21. All right, so looking at some big capital raises for the week. Naturally, it was a slow week with the Christmas holiday and the New Year holiday in there, but I did want to highlight two companies. So Stark Future makes electric motorcycles. The Varge is the name of their motorcycle. It's an off-road dirt bike. I'm not much of a motorcycle guy, but these look pretty cool. The bike costs $12,900 each. If you order one today, you get it in June of 2024. So it's not a mistake. That's 18 months from now. It's a really long time to wait to get a product from somebody. So hopefully this capital raise here that they're doing will shorten that kind of delivery time or manufacturing time, help them get some scale. Stark raised $53 million Series A at a $510 million post-money valuation. And then Form Mobility is a subscription-based electric commercial truck solution for businesses. So this is a really interesting idea, right? So these guys let a company subscribe and have access to electric trucks that are stored and maintained at centralized facilities. The drivers pick up the truck in the morning, they make deliveries, they return the trucks at night for charging and maintenance. They currently operate in San Francisco and Los Angeles, who's in these like larger metropolitan areas where they can drop off and pick up and make sense, right? So Form raised $12 million at a $63 million valuation, is 91% increase over its seed round in December of 21, which was 13 months ago. All right. So now we're looking at some returns for the week. So here's trailing returns for the broader investable secondary market, pre-IPO market. It's just ugly across the board. Pre-IPO stocks underperformed the S&P 500 more than 30% over the last year. This is kind of like a 1-year wrap up, if you will. And the S&P 500 growth by 20%. Just not a great year for private tech stocks. And you can see that from the growth of $10,000 chart that most of this underperformance was locked in the second half of the year, right? The S&P and kind of pre-IPO stocks were hanging in there together. And then, once that second half of the year hit and it looked like things were not going to recover, the pre-IPO stocks started to trail off in a pretty material way. And shifting individual company performance, Kraken had a great week. I'll talk about that more in a second. And Epic Games just took it on the chin. So I have to imagine that like this Epic Games underperformance or downturn was a direct result of that FTC fine that Epic got for $520 million. And I know they kind of corrected all those issues several years ago, but the fine just hit in kind of mid-December. So perhaps this downturn is related to that negative news. But in a surprise in the quarterly numbers, that's what we're looking at here, right? Kraken crushed it this quarter. So clearly some folks are out there placing some bets with Kraken that they'll win market share now that FTX and some of these other crypto exchanges are folding and gone out of business. It's naturally like whoever's left is going to do well, especially if crypto kind of comes roaring back, which I think a lot of people do think that's going to happen in the long run. I'm not surprised to see OpenSea getting crushed in Q4. The NFT market, it's got some soul searching to do, definitely. That's my opinion. And trading art might not be a most viable use case going forward, but I do have hopes for that kind of that NTF technology. And I think there's a lot of applications that could hit mainstream that could perhaps bring an OpenSea back up. I'm not sure if it's going to kind of get back up to the echelons of where it was, but there's certainly a lot in the NFT space that could be out there. All right, so the year-to-date picture has been brutal, right? And we've been talking about this for the last several weeks, right? But SpaceX continues to be the darling. They recently announced just this past week that they're out raising capital again in a $137 billion valuation. So it's a modest 8% increase, but with everything else going on in the world, it's still incredible that these guys are appreciating value. The last time they raised was in June of 22 at $127 billion. So not a great year for pre-IPO stocks in general, and that kind of mirrors what's going on in the public tech market with just the bloodbath that's happening there. So it's the same type of performance here in the pre-IPO space. All right, so now we're going to do a spotlight on Stripe, right? So every week we kind of take a pre-IPO company and do a little bit of a deep dive here. So Stripe is an online payments company. It's available in 47 countries and offers acquiring, card issuance, wallets, bank transfers like ACH, and then buy now, pay later. So if you start a business and you want to accept payments, right, online or on your mobile app, you can go to Stripe and they have a great solution, right? Super simple to get going. They have solutions where you can literally take a snippet of code or use their page entirely to process a payment, or you can do a full-blown like kind of API integration directly into your workflow. So it's a great solution, especially for technology companies or folks that are more web focused with their businesses. Or internet focused with their businesses. And the pricing is competitive too. So the company's been around since 2010, so it's about 12 years old, and accounts Amazon, Google, Spotify, Ford Motor Company, Microsoft's Atlassian, Wayfair, Peloton, Instacart, Twilio, Lyft as customers. So you can see it's like the who's who, right, of technology companies, and also incumbents like Ford Motor Company that use these folks. All right, so the company's got a 63. I have the company at a $63.9 billion valuation based on my calculations and leveraging 8View secondary market pricing, right? So that's down 33% from its primary financing round. They had a 409A valuation in July that put the company at 74, but as you know, like the market's come down since then. So I think it's closer to 64 billion now. From a financials perspective, they generated $13 billion in 2021. That's kind of the latest revenue number that's in PitchBook, right? Hopefully we'll get a 2022 number here in the next couple of weeks. They got like the who's who of investors at this place. You can see the list there. a lot of the old school PayPal guys, Elon Musk and Max Leshin and Peter Thiel are in there, but everyone's getting a taste here with um, Stripe. And the business model. So like, let's talk about that for a second. So they earn revenue primarily from the online payments. So again, that's, someone going to a website, a company's website, putting in their credit card information and then submitting it and then getting charged for the service or the good. But to dive in a little bit more, they're getting they get the acquiring payments. That's what I just described. They have fraud monitoring. So naturally, somebody comes in and is using a credit card from a different part in the globe than where that card's registered, et cetera. So that fraud monitoring's out there, and Stripe offers those types of services. They use some customer invoicing. So they've started to open up these other businesses, ancillary businesses that complement that kind of primary online payment acceptance service that they have, and then marketplace services as well. So if you're like, a Spotify, you want to collect fees from somebody, but then you need to pay a portion of that out to the folks that have the shops on Spotify. They facilitate those types of payment as well. And then just recently, like in the last 2 or 3 years, they've gotten into the card issuing space. So that's what, like, I was doing a little bit of that at SoFi Galileo as well. And that's an interesting space, but it's just emerging. I anticipate it's probably going to get bigger. There's applications of that which may not be obvious. So interchange with debit cards. Like a bank or Stripe would issue a debit card with a bank partner to an individual, and then that individual can use that debit card to go and spend. And a lot of times that's helpful for like fleet management, could be a case. So a company is using Stripe for kind of online payments, but then they also have drivers out there and they need to fill up their cars with gas. So they need a debit card to do that. This could be a way to facilitate that. They could put a card instead of like a Shopify sending, sending an ACH to the shop owners. They could issue them a debit card and put the money on the card, and they could use it immediately, right? So there's a lot of these kind of other applications that come out there with payments. But Stripe's an incredible company. I think that it's continuing to grow really quickly. I anticipate the valuation will grow pretty substantially over the next in the long run, I should say. And no doubt these guys are probably looking to go public here too, when the market starts to turn. Okay, and then the last thing I want to hit on is brain computer interface, and I have a video here, so hopefully this will work, right? But brain computer interfaces are exactly what it sounds like. You put a computer chip or electrodes into the brain, and you can start to interact with the computer, right? So this is queuing up. Hopefully it will come in. But Neuralink, which is an Elon Musk company, right? Elon Musk founded company, one of the many that he has, is really kind of at the forefront of this technology. These guys have so Neuralink, which you can see if this video starts to play, is they've taken a monkey and put electrodes into their brain, and which has allowed that monkey to be able to control a computer. So this is some really interesting applications. And naturally, a couple of weeks back, the Neuralink announced that they're submitting an application to the FDA to get this approved for like human trials, and they're going to kind of go through what you maybe would see with like a drug trial, right, to get this approved for use with humans. But what's fascinating, and they're kind of immediate applications, is they want to help, blind people be able to see. They want to be able to help folks that are paralyzed, that can't move their hands, to be able to use a computer or talk on a phone. That's the application here that you're seeing. But I think long run, and if you look at their website, they've even talked about, the ability for someone to connect to the internet and be able to browse the internet. So the applications here are like fascinating, right? Let me see if I can hit one more button here to get this to play. Oh, here we go. All right. I think it was user error on my end. We'll see if that goes or not. But yeah, so the applications are really interesting. And the one thing that I think about too is that with the pace of technology kind of coming forward here over the next several years is and really over the next, I would say, like 5 to 10 years, like this concept of Moore's law and like the acceleration and pace of technology happening faster and faster is like what types of new technologies are coming out or emerging technologies are coming out that will really impact the investing landscape in the next 5 to 10 years, which for investment is not that much, not that long a time. If you go back and you just look at like before the iPhone was released in 2007, and I'm pulling together a white paper on this now, and you look forward to like 2022, the top names in the S&P 500 are not the top name now. And in fact, some of those companies that are in the S&P 500, like, didn't exist, right? The iPhone shows up and now all of a sudden there's like mobile connectivity and there's mobile apps. Those things really didn't exist prior to the iPhone hitting the scene. So it's pretty fascinating. I'll get the link out when I send this video, the link out to the webinar, video webinar. I'll get the link out to this Neuralink video too, so you guys can watch it. But if this happens, like one application, I was talking about this with my wife last night. If you have a brain computer interface and this is now standard, which, maybe that doesn't happen in 10 years, maybe that's for like 20 or 30 years out, right? Do children go to school anymore? Right? Do we have like desktop, laptop computers? Especially if you start to have these things like Apple and Meta's putting out contact lenses for AI or augmented reality, virtual reality, these goggles that they're coming out with too. I mean, it's really going to be interesting to see what happens. And then of course, what emerging businesses come out of these new mediums and these kind of new technologies that frankly don't exist today too. So I know venture capital is an incredible impact on technology, and then subsequently those companies end up having a massive impact on kind of the public stock market, the S&P 500 specifically. I wouldn't be surprised to see kind of an acceleration of that, in the next decade or two. And I'm just kind of curious on which of these emerging technologies will hit first, right? And that certainly makes, I think, an interesting component. So, all right, let's hit on some Q&A. I think I'm totally frozen here. Oh, there's the video. All right, well, I'll let this play while we talk Q&A, but let's see if we have any questions. So yeah, let me just describe what's going on here. So the video, the monkey is using the joystick there. You can see in the right hand, that tube, that's like a banana milkshake. So anytime he does something right, he gets a little banana milkshake. But he's using that joystick. This fellow here is turning on the Neuralink with the phone, the external phone, which is wild. And then they're going to unplug this. So the computer's kind of working with him now, setting kind of the baseline. Then they'll unplug the joystick and you'll see the monkey move the white dot to the orange square with his brain and the connectivity that they have to the computer. Later, the monkey plays Pong with two joysticks going back and forth, and I'm sorry, two paddles going back and forth, and you can see that the joystick is unplugged, right? So this is happening now with monkeys, like I mentioned. Neuralinks applying with the FDA now to have human trials start. So I mean, I wouldn't be surprised if we start to see this type of technology being used with humans within the next 5 years, or at least the next 10 years, especially with those with disabilities, which I think is their kind of initial use case here. So okay, all right, we got a couple Q&A questions that came through. All right, so the first one we got is, do you think we'll see more internal valuation decreases in 2023? So I do, yeah. So I do think we're going to see those pre-IPO companies with option plans. They're definitely going to be forced to do a 409A valuation at some point. And some of them may have already done it. I mean, those don't have to be public. I think what's interesting is, employees see these. Obviously, all the employees at a company see them. Some of these pre-IPO companies are huge. They have thousands of employees. So that, that information is kind of readily available for all the employees to see. So, of course, sometimes that leaks out. So I do think that some of that stuff's going to start to hit the press, especially for these larger kind of pre-IPO companies. I think they get a lot of attention from the press. So I do think we're going to start to see some of those new numbers filter through. And then And then let's see what else. What other question we got here? Okay, here's another good one. Do you think the pre-IPO companies will need to raise fresh capital in 2023? So in general, I think that these late stage companies, right, are not going to probably need to raise. Most of them are profitable. A good example of one that needed to raise was Klarna. So they went out this past summer and raised and just got crushed on valuation. So I anticipate that founders would probably in the CEOs and management teams of these large pre-IPO companies will probably do things like lay off employees or cut expenses and to drive to profitability, or perhaps even tap the debt markets, the venture debt markets, as opposed to going out and raising capital right now in this type of an environment, right? So so I don't think they're going to do that. The other thing I think is important too is that there's a very robust secondary market for these pre-IPO stocks, and that's that I think a lot of people perhaps take for granted. So if you're an employee, like some of these companies have been around for a while, like SpaceX was founded in 2000, I think 2002, if I remember correctly, and we were talking about Stripe here earlier. That's 2010, so it's 12 years in. So if you're like an employee, an early employee at Stripe, your personal stock is probably worth millions, tens of millions, perhaps. And you've already been there for 10 years, 8 years, right? And you're a multimillionaire on paper, but in your own personal balance sheet, cash in your bank account, it's not there, right? Which can be frustrating, but there's such a robust secondary market that I definitely think people will be able to get access, and companies are doing that. So SpaceX does it now. Every 6 months, they give an opportunity for their clients to go out in the secondary market and do a trade and to get some liquidity. And I could certainly see some of these other pre-IPO companies having a kind of a more consistent structure there too. But needless to say, I think that robust secondary market's there, and I think boards at these companies are allowing people to transact if they need to get liquidity. So, okay, that's great. Listen, if you guys need anything, I'll stop there. If you need anything from me, please drop me an email or give me a call. Any kind of pre-IPO research, or if you want to talk about the fund that we're offering, the Venture Capital Fund, which is a rules-based strategy that invests into 15 pre-IPO companies. It's the largest by valuation in global developed markets. It's an equal weighted portfolio with a 5-year term, and we return capital as quickly as possible. But if you'd like to talk about either of those, please do so. And then visit agdillon.com/research if you want to get more research, either on a week, which we publish on a weekly basis. And then also there's, LinkedIn and on Apple Podcasts, we put out a lot of information there too. So thanks so much, and I'll talk to you soon.